Soybeans starting the week with big gains amid forecasts that indicate a return of hot, dry weather next week. Michelle Rook is back to talk it over with Sean Hackett in Markets Now.
Monday's market closes higher in the row crops. We were mixed in the wheat market. Sean Hackett with Hackett Financial Advisors joining us with analysis. And Sean, soybeans the price leader on Monday. So was that market putting in weather premium, or was that some positioning ahead of the WASDE?
We really don't see any major change in the weather pattern heading into mid-late July, so I don't think that's the reason. I think the market, in the back of their mind, they know that acreage report really knocked those acres down. They're expecting a bullish report on Wednesday. We hit the market hard on Friday, and I just think that there was, short covering, preparing for this report, and then trade whatever that report says based upon expectations. So I really feel it's all USDA positioning related.
So the corn market obviously got spillover support from higher soybeans and the product values, because any way you slice it, that's going to be a bearish report on Wednesday for corn, isn't it?
There's no way to get around it unless they surprise and really lower yields significantly in July to offset that. The history of the USDA wanting to lower corn yields in July is not very good. 2012 was an extreme case where they actually did do that, but I want to remind everyone that in July of 2012, it was hot, dry. The crop was falling apart day by day, hour by hour. We're absolutely not seeing that. We're seeing cool, wet weather. It's hard for me to think that yields would be able to offset those increased acres and create a bullish report. At least that's how we're seeing it right now.
Yeah, and the funds have actually gotten out of a lot of their long position in corn, so they're comfortable already, right, with this crop size?
They are comfortable. Their view is the worst case scenario is off the table. The history says the worst case scenario is off the table. So now what we're trying to do is micromanage, how far below trend is it going to be? Is it 175? Right. Is it 178? Is it 172? But that's a lot different than, is this going to be down 20% in yields from trend like we saw in 2012? And the funds are now reducing their longs, getting comfortable with that concept.
All right. Well, thanks for joining us. That's Sean Hackett with Hackett Financial Advisors. More AgDay coming up.